I know my grandmother cried when I told her I was going to be a bookie, but it's a very lucrative.
Happy tears or sad tears?
No, sad tears. Yeah, sad tears. But I'm so happy. Like it's a great industry. It's really fun and yeah.
The Business of Betting podcast is presented by Optimove, the #1 CRM marketing solution for the iGaming industry. 4 out of the top 5 U.S. operators personalize player experiences with Optimove, the #1 CRM marketing solution for the iGaming industry. Learn more about Optimove by requesting a demo at optimove.com/businessofbetting. And if you like what you see, you will get your first month free.
What is up, everybody? I am Jason Trost, the host of the Business of Betting podcast. I am joining you from Fort Lauderdale, Florida. SBC has moved down from New Jersey, and I'm joined today with Tom Waterhouse from Waterhouse VC to talk about sports betting, life, watches, and whatever else comes up. Welcome to the podcast, Tom.
Thank you, Jason. Good to be here.
So we just met for the first time. You said you're coming from Australia. Did you just get off a plane?
I got in last night. My flight got cancelled, so I was Sydney, LA, Houston, Fort Lauderdale. And yeah.
I'm kind of tired listening to that.
Sydney's a beautiful place, but it's a long way away from everything.
So what made you come to the show?
Look, myself or one of the team go to all the gambling conferences. So basically we try and meet as many suppliers as possible and do as many deals as we can. So we've done 4 deals so far this year. We did 7 last year. And basically we source them at these conferences.
So you have a name in this industry. I mean, I've just seen like 3 people have stopped you. Nobody stopped me as we were walking around. So you're kind of famous, I guess, in this.
The family have been in gambling. My great-grandfather was a bookie in the 1800s.
Okay.
Grandfather was a bookie. My dad was a bookie. And
couldn't make it in medical school or something?
No, and I was a bookie straight out of university, and it was a great business until basically they changed the advertising laws in Australia and 3G and iPhone came out, and then the internet really took off. And so we launched an online betting business, tomwaterhouse.com, and it was the fastest growing.
How'd you come up with that name?
Well, it was a hard one, actually. It was really hard. But everyone was going for like URLs, sporting bet, sports bet, TAB sports bet. And all the UK bookies were names, Victor Chandler, William Hill, Ladbrokes. So I thought, well, let's just go with the name. And we grew really fast and sold it to William Hill, then ran William Hill's business for 4 years. And that sold to Stars Group and then started Waterhouse VC.
Great. So you've been around the industry for ages.
Yeah.
For as big as the market is in Australia, I actually know very little about it. I mean, I know you guys have per capita, your betting is massive. You've got pokies everywhere. You're big into horse racing.
Yeah, correct. Yeah, it's huge. It's like $30 billion lost every year on gambling. Largest gambling per capita in the world, but only about 10 to 15% of it is sports betting and racing because you have no in-play and you have no online gaming. So all the gaming is land-based, and then there's obviously a huge amount that leaks offshore to illegal operators. But yeah, the gambling market in Australia is massive.
So maybe for those listeners like me who know Australia's huge but don't know the market, could you lay out like what are the similarities and differences between, say, the UK market and the US sports betting market?
Yeah, so it's quite similar to the US in the states that don't have gaming. It's got a high tax.
By gaming, you mean
no online casino.
Okay.
But it's high tax, high regulatory environment, tough restrictions, all the KYC stuff like that's coming to the UK, very similar in Australia. But then you've got this big land-based protected gaming sector, which is huge.
And it's like Tab Corp.
The Tab Corps are the large sports betting.
Okay.
But you've got like lotteries businesses, you've got land-based casinos, but you've also got these RSL clubs or clubs all around Australia. So you go around, every suburb has got a big club that has pokie machines. And that's a huge business. Yeah, most of the gambling loss in Australia is in casino, pokie machines, lotteries, and so on.
Okay. And what do people mainly bet on?
In Australia, the biggest loss is in casino games, like pokies.
Okay.
Poker machines, yeah.
Okay. And pokies are casino games?
Like slot machines. Yeah, like ching, ching.
Yeah, the one-armed bandit.
Yeah.
But it's like, is it like 777 kind of ding ding? Okay.
Yeah.
What'll people think up next, huh?
Yeah, exactly.
The things people do with their free time. What about on the sports side?
Yeah, so sports is big, but because there's no in-play, racing is still the dominant form of gambling in Australia. So horse racing is a massive sport, but it's also protected because there's no in-play sport. And unlike basketball...
Because it's illegal.
It's illegal. No in-play online sport.
Okay.
So unlike in America where you've got maybe 72 games or 80 games in an NBA season, you only have maybe 8 games a weekend of rugby league or AFL. And so betting product. They have no online gaming, no in-play sport, but you have wall-to-wall racing from when you wake up till after you go to bed every night.
Yeah.
You start off in New Zealand, Australia, into Western Australia, into Singapore, Hong Kong, South Africa, UK, US, back to Australia, non-stop horse racing. So horse racing is a massive game in Australia.
You guys are crazy.
Yeah. But
Do you think Australians are crazy?
No, Australians really punch above their weight in terms of gambling. So the largest betting syndicates in the world from Australia. You've got some of the largest operators come from Australia. It's a real breeding ground, a little bit like the UK for people in this industry.
Yeah, that's for sure. So in terms of, I mean, you're fourth generation. I think oftentimes, I don't know how much you know about markets, but I come at sports betting from the financial technology side of things. I see sports betting like a financial marketplace, just like you buy and sell stocks.
Yeah.
But I think most people in the industry see sports betting like entertainment, like not that dissimilar, like it's a pokey, but a different form. So instead of like whirling a roulette wheel, it's an entertainment-y, money-based thing. Do you see sports betting as entertainment, or do you see it as a financial transaction?
So I think what really changed, and it's a good point, Jason, because gambling is the way I knew it growing up, was really a game of skill in a sense, in that you would think about whether you were going to place that bet on sport or on racing and think about the probability, and you knew that there was edge against you, like in terms of margin, but you were trying to beat the bookie, and the bookie was trying to beat the punter.
Yeah.
But then what happened is they shifted from being very low tax environments, and obviously exchanges like Betfair, Smart's competitor businesses, was charged on a gross profits tax. But then everything changed in 2008 where taxes started to go up, and the tax went from a gross profits tax in Australia to a turnover tax. And when you've got a 2%, 3%, 4%, 5% turnover tax, it suddenly becomes unprofitable to take a punter that loses less than 4 or 5%.
Yeah.
So all of those marginal punters that, if you turn over $100 million a year and lose 1%, or you might win 1%, the bookies really that's a tough customer. You know, I know they might lose $1 million, but they could also win $1 million. So the bookie's really on edge. But if you need someone that turns over 100 million that loses 5 to even take them as a bet, because you got to pay 4 million in tax on those bet, and you suddenly get a very different type of customer, and then it becomes an entertainment bet and a recreational bet. And so the industry has shifted to being where you see in the regulated markets far more entertainment focused, recreational focused, rather than playing the traditional people that have got some ability, some edge.
So from my perspective, I think it's bullshit. I think doing a turnover tax is bullshit. It basically encourages people to go, I don't know which way down the value chain, but people are going to...
Yeah, you're not allowing everyone to bet. You're forcing a market away that was
You're guaranteeing people are going to lose.
Yeah,
basically.
And I think what's nice is when you think that you have the ability to win, you get a lot of people that will try. So if I know I've got 1% against me and I'm betting on sport or I'm betting on racing, I probably have no edge with 1% against me, but I'll give it a go. But if I have 10% against me, I'm like, how am I going to win doing that? So it's you get a very different type of customer.
So I'm assuming you're politically connected in Australia because I assume it's a small world over there. And what was the rationale for changing the tax? Was it Australian government's like, fuck it, let's rinse it and make some more money? Or was there a philosophical
I think it was a very changing time in that you had this sort of ex-government monopoly in that Tabcorp was funding the industry to a huge extent. And then you had these offshore online betting operators that they weren't quite sure how to handle, licensed in a different jurisdiction, being a territory, Northern Territory. And they're like, well, we don't want to be business partners with these guys getting a gross profits tax. We can actually monitor what the turnover is. We'll charge on turnover. And I actually think it was a long-term, a very, very poor direction to go in. I think a gross profits tax enables all different types of customers and is a much fairer tax and actually incentivizes lots of different people and long-term keeps the industry more vibrant. But that's the direction they went down, and yeah.
It's too bad.
Yeah.
It's a shame. Well, governments make bad decisions all the time, I guess. What's the status of exchanges in Australia?
So it made it very difficult so Betfair really grew strongly. In 2008, 2006 onwards, they were really going really strong, making real inroads. But then that all changed. The model changed. Then when they had a turnover model, suddenly the commission was much higher, different type of customer, liquidity dramatically dropped, and they didn't become a large scale operator.
Great. Well, that's a bummer.
Yeah, office markets. But the exchange space, and you probably know it better, is such an exciting space at the moment because you've got this huge behemoth in poly market and you've got all the regulatory change in Kalshi in the US, and what they've been able to do and achieve from a regulatory point of view is a real game changer in this country. It seems to be anyway. And how are you guys positioning in terms of, from a global perspective? Obviously you've got large business in the UK, but how do you see it playing out?
The new world of exchanges? Well, it remains to be seen. I mean, this Kalshi sports betting thing, if I had to make a call, I would say that's not going to stick. But I'm very curious if it does stick. And I do think it should stick in the sense that I believe there should be a federal regulatory framework in the United States and not this patchwork of state-by-state stuff. So I think it makes sense for the regulation to be on a federal level. The CFTC feels like a weird home for it, but I'll take it. I think it's much better than the racket that we have today, where we have to pay casinos a racketeering fee, an extortion fee to get a license to get quote unquote market access. It's basically like what's it called, like a protection racket almost to operate in the United States. So I'm very pro a federal regulation framework. We'll see what happens. In terms of poly market, they operate outside the bounds of normal behavior. So who knows? The FBI visited the founder's house, but it's hard to see with the Trump White House and the Trump DOJ doing much about it. So it's interesting to see betting exchanges, prediction markets, whatever you want to call it, finally get some long overdue.
Well, it's a great product, isn't it? Like especially if you like to bet on the main straight out markets, it's hard to go past.
If you listen to this podcast regularly, you'll know I bang on about this, but I think sports betting over time should function a lot like the financial market, where you have the exchange as a base layer, and then you have brokers on top of that. So my vision for sports betting is that sports books will no longer be in the bookmaking business. They'll be in a brokerage business, and that they'll all derive their prices from an exchange. Have you ever thought about that model?
It makes sense, doesn't it? And I guess you see really bookmaking in these regulated markets is who can get the scale and who has the ability to acquire customers. And I was thinking along those lines, like Robinhood with Kalshi, when they talked about that, is suddenly if you can be the place that actually gets all the customers, well, to your point, all the bookies, then if they can't get the customers at the same cost per acquisition as that type of business, they're liquidity providers, aren't they? But it just depends who can acquire customers and keep them engaged and keep offering the products that they want. You think I'm very price sensitive better if I bet. There's a big chunk of the market that's not.
I think that'll change. I mean, in my opinion, it'll change. I mean, you have a lot of these startups that have popped up that kind of give people analytics, tools and betting edges. We just launched something in-app where we have price comparison in-app. So if you open up SBK on horse racing, we show you what the other top 10 books are pricing the race at.
I think the interesting thing with betting, the reason why it's been slow for people to be price sensitive is that you get the return of being good with getting your price if you win. It's not an upfront, you have your $10 and you back it at 460 or 480 or whatever. You're having $10 and you wanted to win. You don't realize that difference until you win. And when you win, you're happy you won, but it actually makes a huge difference.
I disagree with that in the sense that if you look at the lottery, everybody knows what the payout is in the lottery, and people will price shop the lottery,
that's true.
They mathematically won't do the math on the odds of payout, but the $1 billion lottery.
No, it definitely gets more volume.
It's right. So, and you're not going to win. So I think the issue in sports betting is odds make no sense, whether it's plus 200 or
That's
8
true.
to 1.
And every country is different, isn't it?
Every country is different. So if something's 8 to 1, even with me being from the industry in 15 years, I don't know what the fuck that means. I can figure it out if I open up a calculator. I don't know if the true value is 9 to 1. I don't know if it's 7 to 1. And if you really tell me, humans have a bad intuition of probability in general. I think that's why people aren't that price sensitive. So I think my hypothesis is if you can make price comparison easy, everybody knows 9 to 1's better than 8 to 1, even though they might not know the true value is 10 to 1.
No.
If you can make that easy, then I think you can start to build a pattern of price-sensitive sports bettors.
Just the issue with current bookmakers, they're not incentivized to make it easy to understand what the percentage is.
Of course not. It's what's so fucked up about this industry.
It's interesting.
So I don't know if you answered the question, but I think you did. You view sports betting more as an entertainment product and not a financial product. Or you were saying in the context
it depends what market. So,
I mean, you as a book, philosophically, you're a fourth generation bookmaker.
For me, when I was a bookie, so I stopped being an on-course bookie 16 years ago, and I thought of bookmaking as completely in terms of price. There was no entertainment in it. It was only serious people that bet with us, and we had 100 high net wealth clients betting very, very big, and it was all price trading. But the regulatory market and taxation has changed, that it's an entertainment product. It's mass marketing entertainment product. But you go into different markets, it's different.
So talk to me about your VC. What's the aim? What's your hypothesis? Your thesis, rather?
We focus on buying options in technology suppliers. So it can be a data supplier, like it might be an esports data supplier or a racing odds data supplier or a in-play product. It might be a platform business if you want to do a jasonbet.com. We just did the Shopify betting platform where you can be up and betting in 10 minutes with your own platform. And we buy an option in those businesses, typically for 3 years, to buy 20% of the company at an agreed price today. And our hope is that we can see them go through a growth phase and go from being worth X to 100X or 1,000X. And then if they can, we have a very valuable option. And if they don't, well, we've only spent the cost of buying the option up front. And so we've been operating 6 years. We've compounded at 85% per annum. It's been a really good strategy for us, and we just focus doing the same thing.
35% IRR is what you're saying?
Yeah, 85% per annum. So we've 30 times everyone's money or whatever. So it's been a great.
Is that good? I don't.
It's been good. Yeah, it's been good. Yeah, so for us is that
I forget what the term in the industry is called, but is that investment money out? Because I think a lot of VCs will do mark-to-market stuff.
Oh no, we distribute all gains every year.
Okay, so that 85%.
Yeah, we only mark up an option once it's in the money or we've got the cash.
Okay.
So for us, we don't invest in any operators. We only invest in the suppliers, and we typically only buy the option, and we actually very rarely convert the option. We sell the option.
So talk to me, I'm familiar with the concept of an option, which is the right to buy a stock. Well, in the case of an equity option, it's the right to buy a stock at a strike price in the future. Yeah. What is the mechanism where you have an option in these companies? Can you go through the economics of that?
Yeah, so we go to them and we think you've got the ability to really grow, and you've got something exciting, and you're big in Eastern Europe. But we think that product would be really great in Australia or in Hong Kong or in Brazil.
Yeah.
Obviously, we're going to spend a lot of time. So we've got a large tech team. We've got 30 developers. We spend a lot of time going through their tech. We spend a lot of time understanding the business, understanding what their goal is. And if we think they can go from being here to here. We say we'd like to buy an option in your business.
Yeah.
But we don't negotiate hard on the strike price. They go, oh, we think our business is worth 10 million.
Okay.
We're like, yeah, okay. But in our minds, we think, oh, if they do these 10 things right, they could be worth 500 million.
Yeah.
So we don't negotiate that hard on the strike price, but we don't pay that much for the option. And so when we buy the option, we're just basically hoping that our thesis is right, that this business can dramatically grow. And
this is pretty funny because the last podcast I did was on fundraising. And I said there's only two ways to do fundraising, debt and equity.
Yeah.
And I guess I'm wrong. So
if we let's say we do an option and we might tell our investors this business that we did an option with 6 months ago or a year is looking for funding. We often get businesses that we've done option deals funded off an email within a week.
I get that. I'm just saying it's kind of a third way for people to raise money. So take this theoretical business worth $10 million, or they think they're worth $10 million. Yep. And if you wanted to buy 10% of the company, you'd have to write $1 million check.
Yep.
What are you paying for these options to buy
So typically, the most we pay is about $30,000 Aussie dollars. So maybe £15,000, $20,000 US dollars or whatever. And we buy the option at an agreed strike price, so we can buy 20% of the company. It's normally 19.9 if they're listed, 20% if they're unlisted, and basically...
Step me through this a little bit. So what is your benefit and what is the company's benefit? Why aren't you doing an equity deal?
Because for an equity deal, we've got to outlay a lot of cash.
Okay. So
at the 10 million valuation, if we want 20%, we've got to put in 2 million.
Yes.
We're like, oh, actually, they're raising at 10 million. They might go, look, we'll do an option and we'll sell it to you. It's out of the money. We think our business is worth 20 million. We're like, okay, 20 million. We'll pay $30,000 to be able to buy 20% of your business at $20 million. And even though they might only be worth 5 now or 10 now, they might raise it at 5 or 10. But we go, actually, we think that business, let's say we think esports is needed by the Hong Kong Jockey Club or needed by Tabcorp. And we think that they're the best data provider for esports. So we'll go and analyze all of the esports providers, speak to them all, speak to who they've got contracts with. Our tech team will speak to them. We'll go and visit them. We'll go and speak to their analysts, understand them. We'll speak to the esports leagues. Have they got unique data rights to get the esports data? We go, okay, we think this is the best. Now, do we have the ability to buy an option in that business? If we don't, we move on. If we do, we acquire the option and we go, actually, we think that they've got a really good business. They've got 6 contracts. but we think they have the ability to get 50 contracts. And
So if I'm understanding it correctly, and please correct me if I'm wrong, the company is incentivized to do this because you're buying out of the money option.
Out of the money,
They're
yeah.
like, fuck it. YOLO.
they're like, if we get to being worth 30 million,
can-
we're as happy as anything.
I don't know. You can swear in this podcast if you
Yeah,
feel good.
we're happy. And also, we don't promise them that we can do anything,
But-
but the fact that we've done deep due diligence in it, and we've looked at it thoroughly, it's like a vote of confidence also for them, because we're like, actually, we want to do an option and we want to buy at that valuation. We want to buy the option, the right to buy.
But it feels like, I mean, I guess this is your business, but it feels like it's very asymmetrical, and it feels very, I mean, I just heard about this model for the first time.
Yeah.
So you're the first one I've ever heard talk about this. It's very interesting. Like from the company's perspective, it feels like for 30K, they could be giving away way too much to the company.
Yes, but I realized with TomWaterhouse.com, we had the fastest growing betting business in Australia, and went from 3 people to over 100 something people. And we did all the cognitive testing, hired all the smartest people. So the CEO of PointsBet was our COO. The CEO of Dabble was our CTO. The CEO of iSelect was our CMO. We had all of these guns, like young guns and they were amazing. But actually looking back on it, I went, I just need to get someone from Paddy Power or William Hill that had the blueprint of what they did.
So you're giving your Rolodex for
Well,
this out of the money
we don't
option.
take any board seats and we don't have any active management, but we've got a blueprint because we go, actually, the opportunity is here.
Yeah,
That they're so focused in just conquering 6 operators in Eastern Europe.
right.
And so for us, yeah, we're buying out of the money options, but they're getting someone that goes, okay, well, we think we know how to scale your business.
Right.
And we want to be involved.
I think, and again, correct me if I'm wrong, this isn't really funding for a business. This is more like advisory shares. And
Not really, because we don't take any active involvement.
No,
Like,
but-
we don't get on it. We don't do any
But that's what you're selling. You're selling your Rolodex, your know-how, your network for like 30 grand.
they may sell them and go, oh, Waterhouse VC's done an option deal with us or whatever like that,
Right.
but we're not actively involved.
Yeah. You're not, right? What's it called? The amount of money you pay for the option. The option value?
The option value, yeah.
It's not like substantial funding where you can go run an ad campaign.
No,
and-
but it's definitely fair value,
Right.
if probably over fair value for, they've like got 200,000 of revenue and we're buying an option at 30 million market cap.
Right.
You know, so
I see.
yeah, they're giving
All
away
right.
upside, but it's a big, like,
Interesting. I mean, I love the model. It's a
Yeah.
very
And
cool.
so-
I don't know if I call that VC though.
well,
it's not really venture capital.
We have to distribute all the funds every year whenever we have any gains. And what we've found is our investors over the years have gone, oh, we want to put the money back into the fund. So we sit in around 90 million or so in cash. And then what we do with that cash is we don't need the money for the options because the most we pay for the option is 30 grand. So we park all of that cash. We follow 13F strategy. So we follow the 16 best performing long only funds in the US. So like Berkshire, Bridgewater, Tiger, Third Point, Apollo, Pershing, and so on. We go through their 13F filings and we apply 4 screens to those filings. And then we evenly weight those large S&P positions, like 60 billion market cap and over companies. We evenly weight into those positions. And then we send to all our investors and say, look, all your money is parked in these large cap US equities.
Yeah.
So we're going to perform basically in line with the S&P, but every 6 months or 12 months or 18 months when an option comes off, we're going to perform way over the S&P,
Yeah.
and then we're going to distribute the gains, and then you can put your money back into with us with the S&P, or you can take the gains and do whatever you want.
Super interesting. I mean, you should just put it in a Vanguard ETF and not mess with the 13F filings.
Well, we've outperformed the S&P with a much lower risk profile and a better Sharpe ratio by 15%.
It's been a bull market though.
But-
But yeah.
But even in like the drawback of conservative time, we've outperformed. So our Sharpe ratio is 1.35. Our average P ratio of our companies is 18 times. The S&P is trading at 25 times.
Okay.
It's like, you might be right over a 25-year period. You may be right. But for us, we really like the strategy because we're in ultra boring companies like, not they probably think they're very exciting, but they're not like, we don't own Magnificent Seven. We're in like Dick's Sporting Goods and Qualcomm and
Costco, I hope. Hope
like
so.
US Steel and like these sort of businesses. And we just follow that formula and basically say to our investors, that's where your money is. And we're unlike any other VC firm because we have T+2 liquidity. You know, they can take their money out any month
Right.
because it sits all in.
I mean, maybe I'm splitting hairs, but I would not call you a VC. I'll call you more like a fund manager.
Yeah, maybe, but we started the fund 6 years ago and we thought, oh, we're going to be VC. And then our first deal, we put $600,000 into that deal and got an option as part of the investment. And that worked. And we're like, why don't we just do options?
Yeah.
And then we kept doing.
Great.
Yeah.
Let's pivot to something random. You are very well dressed today. Are you into sartorial? Do you have a sartorial hobby? Talk to me about what you're wearing today.
Look, my dad been very kind in that he got me onto, he's always bought me like suits, shoes, hats, shirts. Like he'll come with like a book of all like different materials. Like it might be this thick, it might be like 5 of them, and say, oh, I don't know, I'm picking out, 5 suits out of these books. What materials do you like? And then he sends it off to a tailor in London or a tailor in Italy and gets these suits made. And so literally I've either been wearing my dad's clothing until I finish school or wearing his tailor's suits. So I have, if ever I'm well dressed, it's because of my dad.
Ah, fantastic.
Yeah.
So do you get your own stuff made now?
Yeah, so basically I'm nearly 43 and he still brings home to my house because he's the 5 books.
He's got a little trunk show for you.
Yeah, and so it's funny, the Italian tailor messaged me and goes, I can't work out if his materials for the pants or the suit jacket, let me know. And so I sent my dad off last night. Dad, the guy needs to know, what is it? And he goes, I'll go back to you.
A few years ago, I got married in 2016, and I was like, fuck it, I'm going to get a Savile Row suit for my... And I bought a book on Savile Row. I learned everything about it, and like the artisanship, what's the right, craftsmanship that goes into making a suit. It's a work of art, basically.
Yeah, it is.
A well-designed suit, so I have a deep appreciation for it.
Yeah, it's amazing, and it takes a while to get them.
Do you get suits made in London, and like do you do the Hong Kong thing?
I have had stuff made in Hong Kong before, but I don't go to Hong Kong that often. I normally either get them in London, Savile Row, or in Italy.
Do you have a favorite Savile Row tailor?
I use a man called Lee Webb. I don't know what his firm's called, but Lee Webb, and
Great, fantastic. And married, kids?
I'm married, but would be 14 years now, and 3 kids, 12, 9, and 7, girl, boy, girl. Keep me busy, and it's good.
And have you taught them the business?
Look,
do you have a chalkboard in their bedroom?
My daughter, who's 12, she came to Lisbon to the SBC conference last year, and we were seeing businesses in Japan and China. So she's come on 3 conference trips with me, and I don't think she likes it that much.
Okay.
But it's been interesting, and she has a much better memory than me. I have to write stuff down or action straight after the meeting, and she could remember all the stuff from the meetings from all through the day, but I don't know if it's for her. I just want to spend time with her. If I'm traveling all the time and it's her holiday, and I'll do the same thing hopefully with my son and my youngest daughter when they're a bit older, because it's quite boring to sit all day long listening meeting after meeting,
Yeah.
But yeah, it's not like going to Disneyland or something.
I don't know if you've heard of the American show The Wire. It's a show about drug dealing in Baltimore, but there's a scene in this, it's like a 20-year-old show. Fantastic show. But there's this scene where there's this teacher in the public school system, and he's trying to teach all these kids math, and they don't give a shit, they don't pay attention. And they're all playing dice for like a gambling dice game, and he starts teaching math he teaches them how to learn the probability of this dice game. And it's a long way to say that I think gambling can be one of the best tools to teach kids math.
Yeah.
And there's always such this, like, because of the morality around gambling, like, 18 or 21 and over, and and keep it away from kids. Have you used gambling to teach your kids math? Because I think it's a great...
Yeah, so it's funny, at school, they used to put on the horse races when I was in year 13, 14.
Yeah.
And they had the horse races on to explain probability to us. And I definitely talk to my kids about probability, that when you're making any sort of financial decision, whether it's buying a property or stock or investing or like betting, everything is probability based. But
humans are very bad at it.
Yeah, in terms of how that conversation goes down, it's not definitely the bedtime story they want me to tell regularly, but I definitely try and talk like that because my dad would always talk to me like that. The chance of this happening, the probability of this happening, nothing is certain. Everything is, it might be very highly likely.
Unless it's death or taxes.
Yeah.
That's 100%.
Well, it just depends where you live. Yeah, but yeah, in everything you should think about it in probability sense, I think,
Yeah, absolutely. Before I let you go, you've been very generous with your time. What do you want to be when you grow up?
Oh, I want to keep doing the same thing. I love this. I feel like when you know an industry really well and you enjoy it, and you've got to find something you got to edge in, and I think through family background and being in the industry 25 years and being like an on-course bookie to online startup to running William Hill's business, just such a mix. And I feel like I just want to take advantage of that edge and keep doing it. And you meet interesting people, and the industry's so fast-paced, especially now. It's a really fast-paced business, and dramatically changing. And I feel that you can be at the forefront of understanding a lot of different industries by being really in this industry. You know, like this whole crypto wave, for instance, none of my other friends were talking about it 10 years ago, but you could see with the Asian bookies that it was suddenly very big. And I'm not an expert on crypto at all, but you get to see stuff in like mobile adoption or the internet usage. I know it's big in other industries, but you really see it in this industry. And it's like you see now with like these live dealer with V2 characters, like where you don't have like real people, you have like avatars and stuff. I'm sure that's going to be big in other stuff. You see stuff that you're like...
That stuff makes me feel old because I see that stuff and I'm like...
You're like, well, it's working. Maybe it's going to work in lots of other places, you know? So it's a really interesting industry. And also no one at school tells you to go into this industry.
Yeah.
So there's a massive edge in that in itself, in that everyone tells you to go and be, I don't know, doctor or lawyer or something like this. And I know my grandmother cried when I told her I was going to be a bookie, but it's a very lucrative...
Happy tears or sad tears?
No, sad tears. Yeah, sad tears. But I'm so happy. I like it's a great industry. It's really fun and yeah.
Great. Well, thanks for stopping by.
Thanks.
And hope you have a great show and
Thanks,
welcome to America.
Yeah, thank you.
Okay, cheers.
The Business of Betting podcast is presented by Optimove, the #1 CRM marketing solution for the iGaming industry. 4 out of the top 5 U.S. operators personalize player experiences with Optimove, the #1 CRM marketing solution for the iGaming industry. Learn more about Optimove by requesting a demo at optimove.com/businessofbetting. And if you like what you see, you will get your first month free.